So it's 2025, and let me tell you, this year feels a little weird. It's like we're living in a movie written by someone who just discovered the internet. Your morning coffee costs more than a streaming subscription. Meme coins, the ones named after dogs, are now striking deals with actual serious businesses. Wall Street traders, guys in suits who used to talk about leveraged buyouts, are now saying on-chain liquidity at cocktail parties. The financial news sounds like a sci-fi convention. You're trying to figure out if you should be excited or very, very confused. It's wild. But amid the chaos and headlines that make you blink twice, something important is happening. It's not just prices going up or down. The plumbing of our financial system is getting a once-in-a-generation upgrade. For decades, money moved on old, rusty pipes. It was slow, expensive, and clogged, especially across borders. Now, a new set of high-tech, super-fast pipes is being installed. Big institutions are finally starting to turn on the taps. This isn't just a tech trend, it's a fundamental shift. The mood is equal parts excitement and anxiety. It's like watching your grandpa try a smartphone for the first time. You're proud he's learning, but terrified he might accidentally order 1,000 pizzas. First up, let's talk about Visa. You know, the little logo on your credit card. They recently said something that made everyone in finance lean in closer. They pointed at the 40 trillion credit market. That's a number so big, it's basically just a suggestion. And they said stablecoins could completely change the game. A stablecoin is like a digital dollar. It lives on a blockchain. It's designed to always be worth $1. Think of it as a casino chip for the internet. But it's backed by real money, so it doesn't suddenly become worthless because a billionaire tweeted a funny picture. Visa sees these digital dollars as the future of payments and loans. Visa and Citi are rewriting the future of finance on the blockchain. Why is this such a big deal? Because right now, moving large amounts of money is slow and expensive. It's like sending a package through the mail in 1985. With stablecoins, banks and companies can move millions of dollars across the globe in minutes for pennies. Stablecoins aren't just trading tokens anymore. They're infrastructure. This isn't about buying a latte, it's about powering global commerce. Visa is basically saying, hey, you know this whole internet money thing? It's not a toy anymore. It's a tool for the biggest financial markets in the world. When a company that processes trillions of dollars a year starts taking this seriously, you know the game has changed. Then you've got Ripple. Ripple's token, XRP. For years, Ripple was famous for its long, dramatic fight with US regulators. It was like a heavyweight boxing match where the rounds never ended. Now they're back with a vengeance and a whole lot of cash. They're planning to launch an XRP exchange-traded fund, or ETF. An ETF is basically a way for regular people to invest in something, like gold, Bitcoin, or XRP. It makes investing as easy as buying a stock. It opens the door for a flood of new money. But that's not all. Ripple's spin-off, Evernorth, is building a $1 billion plus XRP treasury, holding more than 261 million XRP and planning a NASDAQ-listed fund, ticker XRPN. And we can't forget the original gangster of crypto, Bitcoin. For a long time, people saw Bitcoin as just digital gold, something you buy and hold, hoping it goes up. But it was slow and couldn't do much else. Now, a new project called Arcade is building a layer 2 on top of it. Think of Bitcoin as a big, secure highway, but it only has one lane, so traffic gets backed up. A layer 2 is like building a super-fast monorail system right above that highway. It lets you do more things, like run apps. It lets you do more things like process payments quickly without messing with the original highway. If this works, Bitcoin could become more than just a store of value. It could become the foundation for a whole new digital economy. For the longest time, the crypto mantra was all about being an outlaw. It was down with the banks. We don't need the system. We're building our own thing. It was a rebellion, a digital revolution happening in the basements of programmers and on anonymous forums. The whole vibe was punk rock. But now, the punk rockers are showing up in suits and ties, asking for a seat at the table. Companies like Crypto.com, you probably know them from big sports sponsorships. They are now applying for a national bank charter in the United States. They don't want to be an alternative to banks anymore. They want to be banks. Why would they do this? Because it offers legitimacy. It tells customers, your money is safe with us, just like it would be at a traditional bank. Circle, Coinbase, getting licenses and cozying up to regulators. The new motto isn't burn the system down, but rather, how can we build inside the system? This trend is happening everywhere. Big corporations are no longer dipping toes, they're jumping in. Walmart using Ripple's network for payments. Citi, Fiserv, even Block, the company run by Twitter's former CEO, is deep into Bitcoin projects. Tether, the biggest stablecoin provider, which claims to have 500 million users. And it's not just happening in public-facing ways. One of the quietest but most enormous developments is in trade finance. Invoices, letters of credit, supply chain payments. The XDC network, a blockchain platform, recently acquired a major trade finance platform to put this whole process on-chain. This is called tokenization, where a real-world asset like an unpaid invoice is turned into a digital token. It can make financing businesses faster and more transparent. It's not flashy, but it's a multi-trillion-dollar industry being quietly rebuilt on crypto rails. Just as crypto is trying to clean up its act and join the mainstream, governments around the world are waking up and saying, hold on a minute, we have some thoughts. This isn't the Wild West anymore, where anything goes. The sheriffs are riding into town and they're drawing lines in the sand. A perfect example is what's happening in China and Hong Kong. Hong Kong courted crypto, but then Beijing stepped in. The Chinese government recently announced a ban preventing tech firms from issuing their own stablecoins in Hong Kong. Officially, the reason is to protect financial stability, which is the classic government line for, we want to stay in control. This move says, even in a crypto-friendly place, the government sets the boundaries. It's crypto's decentralized dream versus centralized power. Different countries take wildly different approaches. El Salvador adopts Bitcoin. China bans mining. The US and Europe write rulebooks. The future of crypto will be hammered out in congresses, parliaments, and central banks. Now, with all this talk of trillions of dollars and global financial revolutions, we need to pause and talk about something much smaller, but incredibly important: staying safe. Let me tell you a quick true story. There was a man in North Carolina. He got a perfect-looking Zoom invite from a client. He clicked, logged in, and nothing happened, except the scammers now had his credentials. They accessed other accounts and drained $80,000 from his crypto wallet, all from one innocent-looking click. This isn't to scare you from crypto, it's a simple, powerful warning. The biggest risk for most people isn't a market crash, it's a security breach. Be skeptical of links. Go directly to sites. Use a hardware wallet. Enable two-factor. Never share your private keys or seed phrase, ever. Peace.